Virgin Australia's back in the black, announcing a profit of $22.8 million. It's a major turnaround for the nation's second biggest airline, which clocked a $68 million loss last year. The Virgin chief, John Borghetti, says the company's increased its share of the business travel market. And as the battle for the skies heats up, could airfares go lower still? Finance reporter Elise Morgan is at the media briefing in Sydney. Elise, Virgin's been aggressively targeting business travellers and it seems to be paying off.
It does, Nicole. Over the last year, Virgin's revenue from corporate and government sales was up by 60%, and that now accounts for a fifth of all earnings at the airline. It's really been targeting Qantas customers, and it shows it's really paying off. Total revenue for the airline was up by 20% to around $4 billion, and it shows that the airline's strategy of moving from a budget airline to a premium airline is working.
Elise, are there any indications that ticket prices could take a dive as competition heats up?
Chief Executive John Borghetti today, when asked that, said that competition remains fierce among all airlines. We've seen it really play out recently on the Gold Coast, where Qantas recently re-announced that it will be flying back into the Gold Coast now, and we've seen ticket prices dive. But Mr Borghetti remained quite coy on where ticket prices will be going.
The one thing that I'd say is that we do have a cost advantage on our side. And we will continue to have that going forward. So yes, competitive discounting discounting levels are very competitive, but it will be what it will be.
And Elise, despite these strong results today, Virgin's keeping mum about the financial outlook for the year ahead.
They sure are. This year's result is a $91 million improvement on the financial year beforehand. It did disappoint some analysts though, and the share price today is reflecting that. It's down by around 3%. Now, John Borghetti says in this uncertain environment and with the effect of the carbon tax unknown, he's unwilling to predict what the next financial year's result will be.
Elise Morgan in Sydney. Thank you. The global financial crisis and digital revolution have forced unimagined structural shifts onto Australia, and the message from some of those who earn a living glimpsing into the future is get used to it.
If you go forward to 2030 and look back, this was a period in which there was a great change in the Australian economy.
Bernard Salt says manufacturing, retailing, agriculture and tourism will be hardest hit. The contraction of Australia's manufacturing began in the 60s, once amounting to 30% of the country's economic activity. In 2012, it's down to 8%.
But manufacturing, I think, is consolidating down to probably what will be a fairly safe 5 or 6% of the economy.
We'll still be making stuff, just not in the same way.
Things like production lines in manufacturing will be significantly reduced due to things like robotics and to 3D printing.
In fact, there'll be few areas untouched by further advances in digital technology.
There is going to be big changes in businesses like transport, for instance, airlines, due to virtual meetings, and we're going to see virtual meetings shift. They're not going to be like a Skype meeting now, it's going to be 3D.
Technology is the great unknown. If you go back 10 years to 2002, no one had heard of the word Facebook. Whatever those inventions are, whatever those developments are, it will make us more productive.
In fact, Phil Ruthven believes the biggest growth in the Australian economy will be in communication and broadband industries. But it's what's in the ground which will still underpin the economy in 10 years, even though it won't be commanding the same prices.
I think the strategic threat to Australia is not one of diminishing demand, but one of alternative sources, whether it's Kazakhstan or whether it's Chile or whether it's Brazil.
Unsurprisingly, all agree flexibility and training are key in preparing for the coming changes. But Bernard Salt is heartened by the unprecedented interest from the private sector in preparing for the future.
And the role of any CEO, certainly the role of a board and the chairman of the board, is positioning.
And as they say, position is everything.
There's been a sharp decline in new home sales, putting an end to months of modest growth. The latest survey